So let's see what it might look like if every portfolio had some crypto in it.
The market cap is $2.168 trillion. And now the market, it went to zero. Yo!
It's Brian Preston, the Money Guy.
Welcome to the Money Guy Show. Today we're going to be covering some terrible crypto advice.
Yeah, Brian, I'm super excited about this because it seems like for the last, couple of years now, crypto has been all the rage. And there is no shortage of advice out there on the internet of people telling you what you should do and how you should do it and how you should think about this asset class, currency, commodity, whatever it is. And it looks like it's probably here to stay.
Yeah, no doubt. And that's what I think the best way, teachable moment, let's show people some actual examples of the type of advice we're talking about. Number one, crypto is the easiest path to wealth.
Yeah, Brian, I feel like we hear this all the time, that if you want to be wealthy, crypto is the solution. So let's see if that is what the internet is telling us.
Making millions of dollars in crypto is not rocket science. Buy early on the right projects and sell near the all-time high. That's it. Like and follow if you want to make some money in crypto this year.
Well, but was his advice buy early and just sell at all-time highs?
Well, okay. I feel like I can give some perspective on this.
Right.
I am now the official
cryptographer of the two of us.
Because I've decided so many people are talking about crypto. I was like, I'm going to start dabbling in this. And here's a fun little Easter egg. I have now officially 68 times the median crypto investor. So, I mean,
it sounds like you're a pretty big investor. Sounds like you got a lot of capital tied up in this stuff right now.
So what I've noticed is with my custodian or wallet that I have my crypto in, it seems like every other day they're saying new to the platform.
Mm-hmm.
So because there's always new crypto currencies that are coming online to trade. And I think his advice is it's this simple. Get in early, wait for them to get close to all-time highs, and then you dump them. It's that easy. Buy low because they're brand new, sell high.
But here's the thing. You guys out there are financial mutants. You know for a fact that investing in anything is not that easy. It's not that I just buy low and then sell high. So there must be something else going on. Why are so many people out there pitching, oh no, you go like and subscribe, follow my stuff, and I'll tell you how to invest in crypto?
Well, I think it's no different than the financial industry in general. I always try to say, what are the conflicts of interest?
Mm-hmm.
And if people are touting how they're getting rich off of something, what came first, the chicken or the egg? Are they rich because of crypto, or are they rich from getting you in crypto?
Mm-hmm.
And I think people might be surprised to find out that a lot of the folks that are pushing crypto actually have a lot of conflicts of interest.
So you're saying there's actually providers that will pay influencers or pay folks that are out there in a public spotlight to actually push crypto, to recommend that other people get involved with it. So perhaps their advice isn't all that unbiased at all. They're actually being encouraged to promote that specific product or that specific coin.
I had Daniel do some research, and here's what he found. He said it's normal for crypto platforms to pay $500 to $1,200 per active client referred, or up to 70% of a referral's gross revenue or transaction fees.
And so you might be wondering, well, how can these providers, how can they pay these people so well? How can they be shelling so much money out? Well, it's because the transaction fees with crypto transactions are actually pretty high. Now, I didn't know this. Daniel had to educate me on this. Transaction fees as it relates to cryptocurrency are called gas fees, right? Do you want to expand upon that? Am I describing that correctly?
Well, I mean, it's just because depending upon demand, the fees can actually range.
Go up, go higher or lower.
So that's why they definitely have different fees. It's not as easy. And then look, we've been to conference meetups. You and I have had some of that free crypto because they invited us at a conference.
Crypto
we were
drinks
to go
and
out.
hors
We
d'oeuvres.
had drinks, bands, and DJs. So unfortunately, it didn't. I mean, look, like I said, 68 times the median investor, but we're still in this.
And so what about this? So he said that crypto is the fastest path to wealth or the easiest path to wealth. That must mean that it is in fact safer than the stock market. Why would I ever go invest in the stock market if it is so much easier, so much more palatable to go build wealth in crypto. Is that a true statement?
Well, I mean, it's definitely, I think a lot of people are pushing it out there for younger investors. This is the path. And I'm always like, man, they're not telling everybody the catch, because I always like when you talk about investing, like especially in the stock market, the reason I like investing in index funds specifically is that 80% of the time, meaning 8 out of 10 years, markets make money. And then the volatility, yes, there are risks. Yes, there's volatility of ups and downs, but there's somewhat measurable, and there's a kind of a dance or a cycle to what can be expected. And we even did some research so we can show you the numbers.
Yeah, Daniel went to money.com and he pulled down based on volatility levels, based on falls or pulled out or drawdowns by the market. How often do specific drawdown levels happen? He found that the market falls by 5% about every 1.1 years. It falls by 10% about every 1.6 years. Let's fast forward a little bit. It only falls by 30% about once every 9 years or so. Yeah. 40% is like a 20-year time period, and it only falls by 50% once every like 50 years or so. So there are these wild undulations in the S&P 500 in the stock market, as much as the financial media might make you think that there are.
So you just covered it. Every decade you can expect there probably is going to be a year where 30% of the market returns going to get pulled back, but then it's that walk up the mountain with the yo-yo. Yes, it's volatile in a short period of time, but then it takes back in its V-shaped recovery. I know I've only owned cryptos now for less than a handful of months. 5%, 10%, 15%. I've experienced every one of those in just the 4 months that I've owned cryptos. And I'm buying every month, by the way. That's how I've decided. I'm like, I'm going to buy into this just like I do my index investing. And these things are volatile, and we have the data to show this.
Yeah, so what's remarkable is you said you've experienced all those like smaller drawdowns, those 5, 10s, and 15s. What's interesting is we look at the last 10 years where the S&P 500 pulls down 30% about once every 9 years. That occurs in Bitcoin specifically every 8 months. If you want to look at a 50% downturn where the S&P 500 loses 50% about once every 50 years, a 50% drawdown has occurred in Bitcoin about every 1.4 years. And there's actually been 80% declines in the value of the price of Bitcoin, and that's occurred about every 3.3 years. So the volatility, the easy path to wealth, I just don't know that it exists the way that gentleman was suggesting that it does.
No, you better have an iron stomach to the ups and downs if you're going to go into this investment class.
Yep. So, and then just how volatile is Bitcoin? So this talks about like the big drastic downturns. All right, if you look at the standard deviations, that's just the deviation around the mean return of an asset class. This is over the last 10 years. A total market index, which doesn't just invest in large companies, but sort of the entire equity index, has a standard deviation of about 13.65%. The S&P 500 is right there around there. This is large U.S. companies at about 13.2%. If you want to go to a conservative investment like bonds, the total bond market index has a standard deviation of only about 3.15%. Bitcoin tells a very different story than these other market indices. It has a standard deviation of 70%.
Yeah, I mean, look at this. This is not for the faint of heart. One of these is not like the other.
I would argue that this guy saying that crypto is the easiest path to wealth, I don't know about you, Brian, this right here does not feel like an easy path to wealth to me.
There's definitely more to explore, and that probably leads us deeper into the next category of number 2. And this one's important because my background in being a public accountant and tax preparation. Number 2, crypto's a way to stay off of the government's radar.
All right, let's see if we can get some solid advice out there.
Crypto sites that feel illegal to know. And be careful because this one could land you in jail. And I'll show you a safer alternative at the end. The website is called escapeartist.com and they show you crypto tax loopholes. Search no crypto taxes escape artist in Google to find this page. They show you how to lower your crypto taxes through how to invest. And they also will show you how where you live can change how you're taxed. Now personally, I don't want to go to jail because I followed internet tax advice. So here's the safer alternative I mentioned. And it seems like they will help me pay only what I have to on my crypto taxes. They're called 1-800-ACCOUNTANT, and I've heard good things about them, so I think I'm going to give them a try. So I'll try them out, and I'll tell you if they save any money on my crypto taxes. Welcome to Calico Crypto. Like and follow for more crypto tax tips.
All right, so you're an accountant, Ryan. You got to write this down for me because the 1-800-accountant thing and the escapeartist.com thing, those do not seem like they're swimming in the same waters to me. What did I miss?
I mean, first, let's go with the positive, and then I can give some thoughts towards escape artist. The 1-800-accountant, look, crypto is different. I mean, I don't know if you guys saw one of the proposals of Build Back Better was they were trying to fix, the government recognizes that there is a unique advantage with crypto right now is that normal investments like your index funds, your mutual funds, ETFs, stocks, they're subject to what's called wash sell rules. So if you sell something and take a loss on it, you actually have to sit on the sidelines for approximately a month before you can rebuy it. Otherwise, you have to disallow the loss. Cryptos are allowed to. You could take a loss in Bitcoin and pretty much rebuy it, and that way you have all this volatility that you can use because there's so much volatility. You might be able to offset some of your gains by locking in those losses over time. So there is definitely, I could see a 1-800-accountant being able to go in, and all these people that are out there working in crypto help them maximize some of these unique planning opportunities. Now, go back to the initial thing. This gets a little scary to me. This is the gray zone where you're going to get yourself potentially thrown in jail, or because remember, and I said this before, Al Capone was a mobster, but he went to jail for tax evasion. So there's something you need to definitely use as a teachable moment, because escapeartist.com or whatever the website, I don't even know, they fall in that category as everything's deductible until you get caught. Because remember, this is the same thing. I got a lot of laughs out of our React video because I said the Wesley Snipes strategy.
Yeah,
remember,
right.
he had some advisor or somebody told him, said, you know what, there's this little quirky provision that citizens don't actually have to file taxes.
You just not do it
if you do it this special way. And even though he was in the peak of his success, he didn't pay any taxes. Government didn't like it, sent him to jail. So pay attention. Don't do those type of things. And I think we can even go, that's taxation. A lot of people will think crypto is outside of the government. It's decentralized, so you can, do all the things like Switzerland or the Cayman accounts, but in a much easier way through cryptos. I got to tell you, that has even been challenged. And we have some examples of that.
Yeah, what we've seen is just recently, there's an article that came out that says Canada sanctions 34 crypto wallets tied to the Trucker Freedom Convoy. This is what the article said. The Ontario Provincial Police and Royal Canadian Mounted Police ordered all regulated financial firms to cease facilitating any transactions from these 34 crypto wallets. So the government very much did step in and get involved with cryptocurrency transactions.
This is a mixed bag, by the way, because there were some providers that honored the Emergency Act or whatever and actually did freeze some wallets. There were others that basically gave the finger to the government. And that actually bodes well for the independent side of things, at least if you want to know you had protection or autonomy from governments and their proposals. But I think it even goes beyond what happened with the Canadian convoy protest, is that, remember, this seems like as fast as everything moves, we had the whole hack of the pipeline, Colonial Pipeline, where the hackers wanted to be paid in cryptocurrency. They were paid in cryptocurrency because this was disabling a lot of the infrastructure. But lookity here, we found out the government was able to go in and essentially take the money back from the hackers. The government, this is to say that cryptocurrencies are outside of government, I think is something you need to be very wary of, because they obviously have the ability to not only ask providers to take your money, they also have the ability to go track it down through other means. And then I'll even if you want to know the government's interest in this, look, you don't have to look any further than look at a 1040 from 2021 right there at the top of the first page of your tax return. There's this statement: at any time during 2021 did you receive, sell, exchange, or otherwise dispose of any financial interest in any virtual currency? Yes or no?
So it seems to me that if the government's asking this question, they want to know. They want to know who has virtual currency, who's transacting in it. That does not sound to me like something staying off of their radar.
So tell me, I mean, I totally can see how this plays out. They didn't, by the way, it's just a yes or no question. It's not how
it's
much.
Not how much, how'd you do it?
Because here's what they're going to do. I just can see this. Down the road a little bit, they're going to go to Coinbase or somebody else, the big providers, and they're going to say, hey, give me a data, but I want to see a list of your customers as of this date. They're going to go cross-reference it with these 1040 answers, and booyah, who should we go audit?
I think you're exactly right. That's what's going to happen.
And by the way, if you don't think the government has access to that data, when they come in and do SEC audits on us, they know our transactions.
Absolutely.
They have access to all this stuff through Social Security numbers and other things. Don't be naive and think that crypto is outside of the government.
All right, Brian, what about this lie that we've heard? Crypto is the safest way to store wealth. We've already talked about it not being easy because of the volatility that is inherent inside of crypto, but is it a really safe way to store wealth? Meaning, are there strategies that are proven that will absolutely catapult your financial wealth building? Let's see what some of our internet friends had to say about this.
About to buy $1 million home for half the price. The thing is, you can only do this if you know how to utilize cryptocurrency. So this is the house that I'm gonna buy, and it costs about 1.4 million. So I'll have to pay around $7,000 a month. But for this entire house, the total that I need to pay is $740K. It's because of crypto. For the down payment, I'll have to pay about 20%, which is $290K. With the remaining $450K, I'm gonna put that into the Anchor protocol. Once I deposit the $450K, it'll yield me 19% per year. That's $88,000 a year. Divide that by 12 months, and that's gonna make me 7.3K a month. Just enough to cover the monthly cost of this mansion. After it's paid off, I'll have a $1.4 million home, plus be making 7.3K a month doing nothing. If you wanna learn more about crypto, check out my bio.
Oof.
Oh man, there's so much to take apart here. First of all,
how did we not think of that? How did we not? How'd the Money Guy show?
Well, this is how the siren songs are planted, and the fact that we know cash doesn't pay anything right now. You're lucky if you get 0.5% through one of the online savings banks. So, and I've had even clients reach out to me because there's all kind of providers that'll say, "I will pay you 12% or more." He was touting 19.5%. You're like, man, none of my cash investments are doing this. Is a great way. What a great way to build wealth without a ton of risk. But I got to tell you guys, we're going to go through some of the fine print on this, but just your spidey senses ought to be triggering a little bit, because when he says, hey, at the end of this, when it's all paid off, I'm going to have $1.5 million house and plus $8,000 a month coming in. What could go wrong with this? And I'm sitting there going, well, I can tell you how this can go wrong. Is it that $290,000 down payment could be evaporated while you're still on the hook with the bank for the $1.5 million house. It's going to blow up your credit and everything else. This could be just devastating to your financial life, but there's more to this. I want to focus on not this crazy scheme that he's figured out. First of all, good luck. I was about to say cockamamie. Good luck getting a bank to do this loan for you. But let's go a little deeper. Let's talk more about some of the stuff we've seen with BlockFi and the other providers, where they're essentially touting themselves as an alternative to your online savings accounts and your money markets as a way to maximize the interest rates you can make on your liquidity.
Yeah, so the first thing is they are regulated different. This is not like a high yield, FDIC insured, safe account. This is from a cease and desist order issued by the state of New Jersey. What this shows is it says that when you sign up, when you use one of these accounts, you are granting BlockFi the right, without further notice to you, to hold the crypto held in your account in their name or in another name, and to pledge, repledge, hypothecate, rehypothecate, sell, lend, or otherwise transfer investors any amount of such currency separately or with other property with all attendant rights of ownership for any period of time, so on and so on and so on and so on.
You highlighted some things that just popped up on the screen. They get essentially to use your cryptocurrency like it's their cryptocurrency, and there's no time limits. There's no limits to what they can do with it. There's no ramifications to it. Yeah, I can see why states like Kentucky, New Jersey, and others went after BlockFi. There's actually a lot of, this has been in the news because There's actually some settlements that have been reached on this where BlockFi is going to have to restructure a lot of how they're presenting this because it needs to be more transparent. Because I've realized people will they don't read the terms of a contract or terms of service. They just click on through and like, gimme. Bring the 19% in, bring the 12% in. You really ought to read the fine print.
And you can imagine if you're using this as your emergency fund, as your cash reserves, but the institution holding it has these kinds of rights, there are some major risks with that money actually being there for you when you need it. Having access to liquidity inside of an emergency account is an absolute necessity. And I just don't know that crypto providers presently provide the level of liquidity that emergency reserves should have.
If you're really curious about this, Daniel did a great deep dive on it on his FYI by FTE.
Yep.
I'm talking, you're going to get we're going deep with the knowledge on this and the research that Daniel did. You can go a little deeper in some of those excerpts that we just read.
All right, let's look at this fourth line. It's almost like the content team set these up sort of perfectly to go along. Yeah. Crypto is a currency. That's what some people are telling you. So let's see if we can have somebody explain to us how crypto is indeed a currency.
If we piggyback off of my first reason of community, and now we have a goal, right? So the goal to get to $1, we have everybody kind of encouraging everyone else to buy more Dogecoin. Because now it's like, all right, if I get it, then I have it at a certain price. If you get it, you have it at a certain price. And if we get more people to buy it, the value goes up, right? As soon as the value goes up, I make more money, you make more money, they make more money. Oh, wow. So let's get more people to buy it. And then the valuation goes up and we all make more money. So it's one of those things where it's like, if we do that enough times, we can get to $1, which is the goal.
Oh,
so now
wait a minute. I'm sorry. This is all starting to make a little more sense. Let me see if I can get this right. So we're here. We're here at the top. And if we can... We're community. He said community up here at the top. It's kind of like, Fast and Furious family, community. And then if we can convince a few people underneath us to buy some too,
we'll make money.
Yeah, and then if we can convince them to go out and get a few more people, they'll make more money.
They'll make money.
This is starting geometrically. I think I've heard this. I've heard this before. Help me out here, Bo. Where have I heard this before?
I think.
Oh, wait a minute.
I think
he's describing a pyramid.
I think that our favorite folks over at the office, I think Jim figured this out, that I start here and then I bring in some people and I bring in... Here's what we're not suggesting. Man. We are not suggesting that all cryptocurrencies or that Bitcoin or that kind of stuff is a pyramid scheme necessarily. What we are suggesting is the way that he just described it is I start here and then I bring people below me and it raises the price and then people below them and it raises the price. And I just don't know that to me sounds like the way that a currency works. I don't think that's the way that a currency works.
Well, first of all, the government doesn't consider cryptocurrencies. Man,
it's kind of confusing, right?
It's kind of like, look, Tesla, autopilot.
Not exactly autopilot.
So it's the same thing. Cryptocurrencies is not a currency. It's actually classified as a commodity, which makes sense because think about it. Commodities are things like natural resources, oil and gas. They have a limited supply. And one of the big things about cryptocurrency is that there are limited quantities of the cryptos that are created. So it makes sense. And also currencies are buying and selling goods. The price, it just doesn't, you don't have a lot of volatility. That doesn't line up perfectly with how cryptos are actually structured.
Yeah, you just said it, Brian. Generally, currencies don't have a lot of volatility, extreme volatility. Well, look at what the price of Bitcoin specifically has done from January of 2020 all the way until now. That is the exact opposite of volatility. I mean, that is the opposite of not having volatility. That is extremely volatile. So if currencies don't have volatility, but Bitcoin has a lot of volatility, something is not adding up right there.
Well, and think about transaction costs. I mean, I get annoyed. You used to get discounts at the gas station for cash because the vendors didn't want to pay the 3% or the 2%. It keeps getting lower to the actual credit card companies. If you think 2 to 3% fees are high to the providers. Wait until you find out about the transaction and gas fees that cryptocurrencies have. It can be quite expensive. I mean, we saw stuff around $60 to as high as $300 per transaction.
That's right.
Man, it makes those. I remember when I used to go to the ATM and they charged me $2 to use it.
Yep.
But that's too steep. I'm not paying them $2 to think I'm going to pay $60. No way.
And even, it's even crypto or Bitcoin transactions aren't incredibly quick. When I go to the grocery store and I want to, use some of my currency to pay for something, it's an immediate transaction. Cryptocurrency transactions don't always work that way. Sometimes it can take 4 hours or longer for that to process. Imagine staying at the grocery line, trying to check out with some ice cream, and you're trying to pay with crypto in like 4 hours before you get the transaction done. It just doesn't seem like that makes a whole lot of sense.
Well, and then how about the volatility? You showed that chart of volatility. What if the price of the goods you're buying just fluctuated greatly? We missed out on an opportunity.
I know what you're going to say.
There
I'm
was a
thinking
football
about it.
Player.
Yep, it was OBJ, wasn't it? It was an Odell Beckham.
Paid with cryptocurrencies.
He negotiated his
Crypto
contract.
got crushed from the NFL season. Somebody had creatively calculated out. I think he was making $35,000 a year because after he paid all the income taxes at the gross amount after the losses of the cryptocurrency, these type of things create issue.
Yeah, nobody wants to be on the wrong end of that exchange. Imagine if you were selling something online and you listed a price and you had no idea when you recognize that sale what the value of that exchange would be. It's just not something that you want to do in a transaction.
Here's an unpopular fact from the people who are pushing crypto. And look, I'm not against crypto, but I think people just should be fully informed. It's highly concentrated. It's not a currency or even a commodity of the people. Just a very small group of people. 95% of Bitcoin is held by 2% of wallets.
That's unbelievable. The vast majority is held by a very small number of people. And if you look at the top 0.01% of wallets, they control 27%, almost a third of the entire supply.
So it goes back to the office, shape. If we're here at the top and we're convincing more people to buy it below us, you start quickly realizing there's a reason this thing can be sold like a timeshare too, where you're giving huge referral bonuses and other conflicts of interest. That's why I've seen great people I thought were aspiring content creators in the financial space. They come on and they're talking about investing and index funds. And then one day, all of a sudden, they're now promoting cryptos. And I'm like, oh, they got a hold of some of that. They got some of that juice. They got some of that juice. That crypto juice got them on those referral and affiliate and those other type of fees. Pay attention to all these things to keep yourself safe.
All right, so now let's talk about another lie that we hear often, and this one hits really close to home because, Brian, in our day job, we're financial advisors. So one of the things that we do is help people figure out how they should allocate their portfolios, how they should spread out their investments, how they should design their investment strategy. And one thing I keep hearing over and over and over again in the financial media is that crypto belongs and absolutely should be in every single portfolio. It is an asset class that you cannot miss out on. Any immediate takes on that just very quickly?
Well, it's like, I want to know, where does that fit in? Because we have the financial order of operations. I don't remember putting crypto
as
before
one of those
employer
9
match or any of that stuff. I don't know. It just seems like that's a strong statement.
So let's see what it might look like if every portfolio had some crypto in it.
The market cap is $2.168 trillion. And now the market, it went to zero.
Bo, I didn't even know this was a thing.
I don't even really know what that is.
The content team had to tell me that there is a thing where there are people, cryptocurrencies are so volatile, you can actually create reaction videos to watching the real-time video of crypto pricing.
Could you imagine, Brian? I mean, think about this. This guy's watching crypto and it's talking about the market cap and it goes here.
I thought somebody scored a goal.
Could you imagine me and you doing this for the S&P 500? Sitting there forming our reactions, watching it throughout the course of the day, being like, ooh, And we just do that for like the next 20 years while wealth is building in the background. It is very different than this. I don't know that every investor necessarily wants to have this type of experience inside of their portfolio.
Look, I think a great way to kind of bring all this home is that we're not against crypto. I mean, as I told you, I'm even dabbling in it because I felt like one of the best ways to talk about this was to actually experience and go on this journey with you. But here's what I have recognized, and I'm glad I had the perspective or the wisdom that I'd already created financial assets and traditional type of investments. And I come back to this, the financial order of operations that you can just go pull this up for free. Go to moneyguy.com/resources. We have the 9 steps of what you should do with your next dollar. And here's what I like is that it's going to get you out of trouble of your deductibles covered, get that free money from your employer match, pay down the high interest debt like credit cards, emergency reserves, that tax-free growth in traditional things like Roth account, health savings accounts that you can just buy in target index retirement funds, or you can just do total market index funds. That type of stuff is going to be the foundation to your wealth building. Crypto might have a place, but it's after you do the foundational actions, not at the front. And that's what when I hear everybody should do it, since I know the majority of Americans, between 56 to 60% of Americans can't even come up with $1,000 to say every person should have crypto when they don't even have $1,000 in the bank. Seems disconnected.
Here's what frightens me. There's so much information out there on Instagram, on TikTok, on YouTube, on fill in the blank. You have to stay on guard to not fall prey to some of this crazy advice out there. If something sounds too good to be true, it probably is. If someone's trying to sell you a get-rich-quick scheme, the only person that's going to get rich quickly is the person who's selling it. Be on your guard. Try to take in good information. That's what we're going to do here for you. That's the reason we do this show is so we can load you up with sound, tried and true financial information over the long term. If you haven't checked out our website, go to moneyguy.com/resources. We have an entire resource page there available for you to help you take your finances to the next level.
And by the way, I already threw out, you mentioned the moneyguy.com/resources. Yep. We have the financial order of operations. Guys, we're going to load you up. The money multiplier, the 8 questions to ask financial advisors. We got tax guides. Lots of free stuff. Please take advantage of this because it is all part of the abundance cycle. I want you to come learn completely free of charge, apply these concepts, grow our catch. I felt like I spent a lot of this content throwing shade at people who are getting, have a conflict of interest.
Ulterior motives.
And there's no exceptions. Everybody in the financial space have conflicts of interest. I think it's up front to just tell you, here's where we come in. The abundance cycle, it only works when you've already reached success. You have to actually have enough success that you need to hire us. That's where the abundance cycle is. In the meantime, go load up on all the free content. We have moneyguy.com/resources. We will accelerate what you're doing with your financial assets, your education, so that you can make the best decisions for your family and not fall prey to what's the latest and greatest trend that's really rocking all the social media influencers and everybody else. I'm your host, Brian Preston, Mr. Bo Hansen, Money Guy team, out.